Hi guys, so in this video we'll be discussing BOP, which is balance of payment. This is basically part of international trade, which we'll see in a minute. So basically balance of payment is a record of all international transactions and flows of money between a country and the rest of the world. Right? So money coming in the country, let's say if we take Pakistan as an example, and if we live in Pakistan, then in Pakistan, if money comes in to Pakistan, if someone from abroad, let's say one of your relatives, sends money to Pakistan, that's going to be counted as a credit, right? Money coming in, and then money going out of Pakistan. Let's say someone from Pakistan sends money out of Pakistan, let's say to the UK or to the US, then that's going to be counted as a debit on our balance of payment. Now the balance of payment is divided up into three different accounts. The first account is, this is the first account, this is the second account, and then this is the third account. Right, so the first account is known as the current account. Current account. The second one is known as the capital account. And then the last one is known as the financial account. Now these are the accounts themselves. Now within each of these accounts we have different sub accounts as well, or subcategories. For example, in the current account we have 4 different subcategories, in the capital account we have 2, and then in the financial account we have 4 again. So the first part of the capital account is known as trade and goods, this one. So basically this account covers all the international transactions in goods. So what are goods? Let's say if this is a box which is being sold in Pakistan, or it is being exported. Export basically means that we are sending something out of our country, and then import means bringing something in our country, right? So let's say if this is a box. So why is this box actually considered as a good, right? It is considered as a good and not a service. So there is a difference. So basically goods are anything, or is anything. A good is anything which is tangible, right? Something that can be physically held. Something that can be physically held is something that is tangible, and so it is part of, obviously it is a good then, right? And so it is considered, or it is accounted for in trades and goods, which is a part of the capital account. So it can include, let's say, something like carpets, something like textiles, and so all of these things. So let's say if we were to export this box to the UK, considering that we are Pakistan, right? So Pakistan is making this box and exporting the box to the UK. Then in this case, it will be considered as an export for Pakistan, because we are sending this good to the UK. And then for the UK, it's going to be an import, right? It's going to be an import for the UK. The reason being because the UK will receive this good from Pakistan. So anything that is coming from another country is an import, right? And then anything which is going out from your country is an export for your country. So this is the first part of the capital account. Now one more thing to look for is that in terms of exports, right? So if Pakistan is exporting something, then it'll be considered a credit on Pakistan's BOP. And then, right, if the UK is importing something, it will be considered as a debit on UK's BOP. Now the second part of the current account is known as trade and services, right, this one. And so in trade and services, we consider all services, because since goods are tangibles, which something that can be physically held, services are everything which cannot be held, right? Anything that is untangible, something that, or non-tangibles basically, right? Non-tangibles which cannot be physically held. For example, let's say tourism is a service. Getting a haircut from someone is a service as well, because obviously you can't really hold a haircut unlike a box, you can't hold a box, right? You can't hold a box, but you can't really physically hold a haircut or tourism. And so these things obviously have an economic aspect to them, and so that is why they are considered as services. So the third part of the current account is known as income flows, right? It has, well, mainly it considers profits, interest, and dividends. So let's say if you're in Pakistan, right? Again, let's just take the example of Pakistan to simplify things. We are in Pakistan, and as a Pakistani, what I did was, this is me, right? I Let's say I invested some money in a bank in the UK. So there is this bank in the UK where I invested my money. So whenever we invest money in a bank, or whenever we deposit money in a bank, we earn interest on it, right? And so since the money is in the UK, I will earn interest in terms of UK pounds, right? So I will earn the interest in terms of UK pounds. So what's going to happen is, since I'm earning interest in the form of UK pounds, if I choose to, well, bring the money back to Pakistan, but bringing it back to Pakistan, it'll be a credit on Pakistan's BOP. It'll be a credit because now foreign currency is coming into our country, right? I invested my money in a bank, I earned interest on it, and then that interest was in a foreign currency, and then I chose to, well, bring the money back to Pakistan, so that's going to be a credit on my BOP. But if the opposite happened, let's say if someone from the UK chose to invest money in a bank in Pakistan, right? If there's a bank in Pakistan, and if they earn interest on their money in terms of PKR, which is Pakistani rupees, and if they, well, if they choose to bring their money back to the UK, what's going to happen is it's going to act as a credit on UK's account, and then a debit on Pakistan's account, because money is going out of Pakistan, right? Since the UK citizens, UK, some of the citizens from the UK, what they did was they invested money in Pakistan, and then they, well, they got their money back into the UK. This is now a credit in terms of their own current account, and then hence their BOP. But in terms of Pakistan's current account and Pakistan's BOP, it's going to be looked upon as a debit because money is going out of Pakistan. And just like that, so this is one example, interest. Just like that, we have dividends as well. For example, if someone from the UK bought, let's say, or if someone from Pakistan, let's say, let's just simplify the example, or if someone from Pakistan bought a share in the UK, right? If someone from Pakistan bought a share in the UK in some company, let's say Unilever, and then as they bought the share, obviously you earn dividend on the share, right? Because that's the purpose of a share. You earn a certain percentage, which is known as a dividend. And so if someone from Pakistan bought a share in the UK, this company Unilever is in the UK, right? This is a bit complex. So someone in Pakistan, this is somebody in Pakistan, and this guy has bought a share in the UK, right? This guy has bought a share, he has paid some money to buy the share, and now he is in Pakistan. So when he earns dividends on this share, right, this is the share, and when he earns dividends on the share and chooses to bring back the money to Pakistan, what's going to happen is money is coming into Pakistan. So as we discussed, whenever money comes in this case Pakistan is the country which we're looking at, right? So when money comes in, it's termed as a credit, and so it's going to be a credit. But let's say if someone from the UK bought a share in Pakistan and then earned dividends on it and then chose to take the money back to UK, that would mean money is going out of Pakistan, right? Money is going out, and so that's going to be considered as a debit as compared to a credit. So these are opposites. And then the last part of the current account is known as current transfers. So in this account, we consider all sorts of gifts, right? Gifts from organizations, gifts or aids, right? So these are the two main things which are included in this part of the current account. And so let's say if Pakistan was to receive, this is Pakistan, just gonna draw it out, this is Pakistan, right? Pakistan receives some aids or gifts from, let's say, the UN or the EU. So this will be considered as a credit because obviously something is coming in Pakistan, credit, and then if some organization within Pakistan was to, well, aid, let's say, Africa, if Pakistan chooses to, I mean, it's an unrealistic example, but if Pakistan chooses to aid Africa with gifts and aids or something like that, then it'll be something going out of Pakistan and then hence a credit on Pakistan's current account under current transfers. So this wraps up the current account, and then let's move on to the next account, which is known as a capital account.